Hi, I'm Brendan Casey, General Manager Investments with Rest. The theme of the past 12 months really has been volatility. The December quarter's 9% decline in the ASX All Ords has been followed by an even stronger rebound, with equity markets around the world now touching all-time highs. The wild swings come as investors react to often conflicting forces. On again, off again trade wars, slowing global growth, but lower interest rates. Fluctuating forecasts around China, Brexit, Iran, and the oil price. At a local level, we've seen weakening growth versus rallying iron ore prices, cooling property prices versus the surprise election result, and the RBA's back-to-back rate cuts. And the game changer for the recent rally appears to be the central bank's demonstrated willingness to cut rates to stem rising risks. So how is Rest approaching the future? We've always followed a mantra of staying long-term focused, well diversified, and disciplined, and it's allowed us to deliver for our members. Since Super Ratings started keeping records on the average, or median, Australian super fund in 2000, our core strategy has delivered considerably above average performance. So we will continue our philosophy of investing in undervalued assets and taking profit when things become overvalued. And it's always about balancing risk and return. In terms of the short to medium term, history shows that periods of high growth like we've had tend to be followed by periods of slower growth. And more the recent market recovery looks to be about cheap debt rather than economic fundamentals. This should be weighing on share prices and valuations. But equity markets are at or near historical highs, so in our experience they look overvalued. This explains our relatively more defensive positioning versus peers, to the equities asset class of 40% and a high 14% allocation to cash, as at the end of June 2019. This means we may gain less from any further unexpected equities growth, but if or when markets stop defying gravity, and history suggests they will, they have the potential to more than wipe out those gains. And our relatively large cash allocation means we have the dry powder to quickly act. There's also more to financial markets than equities, and being one of the largest super funds means we have access to a wide range of asset classes, including unlisted assets not always available to smaller funds. These diversify our holdings and make us more resilient to any future market corrections. By keeping our eye on the long term, we should continue to deliver for our members. To find out more about your super balance and investment options, just log into member access at rest.com.au. Thank you.